But let's get Ajay Srivastava, CEO of Dimensions Consulting, into our conversation and ask him how he is positioning himself ahead of the big event on the 13th of May, the exit polls on the 13th and the final outcome on the 16th. Hi Ajay, good morning. Good to see you in as always. We got a couple of cautious views this morning, that one should perhaps stay away at this point, not make in fresh investments and take some profits. Is that your view as well?
No, I think it depends upon what you are buying and where you are and what is the time horizon, Sonia, because it's not, generally speaking, you should stay from the market. Some shares are always good to buy. Some shares get a good opportunity to buy when they get corrected. Some things, like say nationalized banks, perhaps have got overreached beyond fundamental. There you would like to, in fact, like we are going short in most of the shares at this point of time, you would like to, in fact, cut down or even go short in some other shares because, you live on hope and you die by reality, and that might get very fast into this market in the next 15 days or so. So I think you've got to be careful, but it's not like it's an open sesame, sell all or buy all.
Okay, let's delineate hope and reality, Ajay. We are normally told to think in terms of three scenarios post 13th and 16th. A BJP with 240, a BJP with 200 to 220, and a BJP with 180. How would you react to each of these, or how would you prepare for any of these scenarios?
I will tell you what I'm preparing for. I think, sorry to get a little away from political reality.
Sure.
What I'm preparing for is that April to June GDP will be perhaps one of the lowest in the country in the recent history. The consumer demand continues to fall, irrespective of segments, consumer durables, consumer products, cars, automobiles, you name it. There's a major shrinkage happening in the consumer buying in this country, which is not stopping at the end of the day. Now, irrespective of which political party comes in, let's say, I'm saying all BJP full victory. What have they announced? They just announced that MSP will be 50% profit over the cost of production of the food grains, including labor and land. What does it mean to the MSP therefore? Where does it take the prices and the inflation to? So, it doesn't matter who wins. The political voices are telling you that to fulfill anything what they're asking you to do it, inflation is going to be one of the biggest ones which will go up in the economy if anything is going to happen, and Ajay is going to keep slamming the interest rates on it. And therefore, if this agenda continues, I think we've got a very bad year ahead of us. Optimism is there that yes, things will start moving and so on, but the crude reality of the ground is that the inflation has eaten into purchasing power, which is why the real estate, the consumer sectors are down today. You've already seen the results of Hindustan Liver and Godrej, etc. They are looking bad. Car companies are anyway looking bad. So the question is, would a majority translate into consumer buying in the immediate future? Perhaps the answer is no. Would an uncertain government become a bigger burden on the economy? Perhaps the answer is yes. But is it the fact that by a single party coming, there's a panacea for economic evils? I would definitely say that's when I said you live on hope and you'll die in reality.
But would that really stop you from buying, Ajay? Because all these macro worries have been on for a while. That hasn't stopped the market from moving higher.
Of course not. As I said, Sonia, you keep buying things. Let's take things which have open offers coming up. Let's take the liquor companies you keep buying. It's every correction you buy it. Let's take pharma companies which have always been educating as pharma and IT are two indexes not linked to the government at this point of time, or broadly not linked to the government, but linked to more fundamental factors like global M&A, for instance. So when you see pharma re-rating, which is already happening in the economy, you've seen all the mid-caps have been re-rated in the last 15 days. It's not a function of government or new party coming to power. It's a function of global de-rating on M&A going around in the world, which allows these companies to be sold to the highest bidder in the next 12 to 18 months. That is why we are positioning ourselves for a Suven, for a Shasun went up by about 40-50%, and so on. Wockhardt has gone up for no rhyme or reason, but again the positioning is it should be sold as a company or will be invested in by a company. So, it's not all macroeconomic. It's about pharma sector, IT sector are pretty well de-linked at this point of time. In fact, worse the economy goes, the better the sectors will do.
Well, would you not be buying any of the power companies? There is an expectation that since the Modi government could ensure 24/7 power in Gujarat, they could find a way out of the obstacle race that national power companies find themselves.
No. And I think the reason I'm not going to buy the power companies is for the power companies to make a decent rate of shareholder return. Now let's understand, globally utilities are bought by large institutions, not by retail investors, because they give you stable returns and they give you good dividends over a period of time. I don't think that's an objective of most equity investors like us or our customers. So in terms of pure big buck returns, I don't think power utilities will happen, for the simple reason that for any power tariff realignment to take place of a major kind, it needs some major push in the, again back to the point, you've got to increase the rates. Because the corporates in India are just too strong to even justify their cost structures. You've seen already the opposition to the audit of power companies. Why is the opposition? Because we all know that the cost is padded up to a level which is unbelievable. So what is the next step? Is to hurt the little consumer who's already dying in any case. So, so to say that it will be easy for power rates to go up, I don't think that will be that easy. To say that power companies will get bumper profit, I don't think that will happen. So in my view, power utility companies will become a stable performer, but we're not going to be an overperformer environment that we are contemplating.
So are you buying any of those, Just Dial or the pizza makers, that kind of stocks? What is your list of stocks at all?
See, what we are saying is, we have two things very important to us. We are positioned, by and large, we are saying customers, position ourselves and our customers into areas which are a little bit away from the government policy making. As I said, pharma is of course one of the biggest bet. IT's biggest bet is a pizza maker. Yes, we started taking position in Domino's, for instance. We've taken because its price has corrected to 960 or thereabouts, and I think it's coming reasonably where we think it's an optimum price point to get in. We have been an accumulator. We have set a call on liquor companies. We said we're not going to sell 100 spirits, even in the open offer. Keep it going. It's running at a price to book of less than 6. You got to be dumb about it not to keep it and sell it off in the open offer. People sold at 1440 and are repenting now. They'll sell at 3000, again they'll repent. So, you buy liquor companies, you buy these stocks. We also have Reliance Infra, for instance. Our largest holding in the economy stocks is Reliance Infra, which we believe is pretty undervalued at this point of time, with a reasonable debt-equity ratio, good project pipeline, kept its nose clean so far, away from controversies. So you have these nuggets which you keep buying off and on. It's not that everything in the cyclical sector is bad, but some of these names are pretty good to buy into.
The only problem with some of these stocks, Ajay, is when the market, if and when the market corrects, some of these mid-cap volatile names are the ones to get hit the hardest. So, say for example, you've given us a name like Shasan Pharma. I mean, if you look at the trajectory of that stock, in 2013 it was at 170. It fell all the way to 50. Now it's back at 80. So, would you advise, getting into names like these which have a very volatile past?
See, okay, here it goes. So now I keep saying that I think, one, the horizon of our investment has now gone down from, it used to be 3 years on an average, if you look at 5 years back, to less than 9 months to a year on an average. In fact, current last 12 months, the average holding period has gone down to even 6 to 7 months. That's the level of holding period. I always advocate taking money off the table to book the profit. That's why I said that the re-rating has taken place already in the 15 days. So now if you're at the late stage of re-rating, you obviously run a bigger risk. But all I'm trying to say is that please focus on correction when it happens in sectors which are away from government policy. I think you'll make the maximum returns there. In the last 3 years, you made the maximum return there. That even in the new horizon, what I think Lata alluded to, saying that 180, 240 and full majority, even if that transpires, what's going to change here? You're going to exchange one bunch of, I don't know use expletives on the television, but one bunch of people for the next bunch of people. I don't think it's going to change very much.
Please beware, please beware. Okay, Ajay, what about stocks like, say the auto ancillaries, the Bharat Forges, Motherson Sumis? That space, again, not bound by Indian government policy, at least. You like any of them?
See, okay, I have a natural abhorrence towards ancillaries, and I'll tell you why, Lata. I have natural abhorrence to anything which supports the major big industry and doesn't have its own brand recognition. Not saying Motherson Sumi is not a good company, not saying Bharat Forge is not a good company, but I would still like to put my money where the company which is the end product to the consumer with a brand name and has the ability to compete in the market and give me price benefit of in the price earning ratio. You look at auto ancillaries, look at the price earning earning ratios, doesn't matter the best company, the worst companies. Look at the price to book. Very, very poor compared to the big ticket companies. Now, why, if I have to really invest money, I would have got money in Tata Motors than putting in Motherson Sumi. I'd rather go to Maruti and put my money than go to Bharat Forge at this point of time. So let's allocate to the front end, I would say the dollars, because dollars are limited, rather than to the back end, because back end is not going to give you the bang for the buck, even at the best of the times. And if the market corrects, you rightly said, there will be mayhem on the streets. So all those 20% charts that we are seeing nowadays for companies, some of it don't exist. I saw BL Kashyap. Now, the company doesn't exist. I think it doesn't exist. I saw Circuit Filters. Now, that's being silly, right?
You are contradicting your own statement, Ajay. On one hand, you're recommending some of these stocks, and on the other hand, you're saying that they don't exist. I don't get that.
You didn't recommend BL Kashyap.
I didn't recommend that. I recommended Reliance Infra, which I bought myself, and for my customers, I said these are strong, big names with a good balance sheet. Okay, you would like to stick to them and not worry about other small ones.
Fair enough. I just wanted your top choices in the frontliners. What would they be?
See, if you look at our top choices in the frontliner today, are okay. When you say frontliner, I presume talking of Nifty 50, right?
Yes.
Okay, I would say today, my frontliner choice would be in the banking sector at this point of time will remain Axis Bank, but it's not going to give you any 25%, it's going to give you 10% return. The biggest one I would still say is pharma sector, which remains, you remember we had an argument about Sun and Ranbaxy long back, now we are both combined, so there's no argument. So you can buy any...
that doesn't mean that you've redeemed yourself from that particular argument, does it?
Can anyone redeem from
no one knew that was coming at that time. Anyway.
I know. Anyway, so now they're linked. So I think if you like to position yourself in the big ticket, Sun would be the first one you would like to go and buy into. I would still say that L&T at 1300 also is a reasonable buy, but if it corrects to about 1200, it's a sure buy. Because eventually, whenever this economy turns around, and number two, L&T will break up post, the current head will move out. L&T will break up into constant units. You're going to get a mega 50 to 100% return at that point of time. Okay. So apart from these two names and the regular IT name like TCS, I would not buy Infosys for love or money, but I would like to buy TCS at any point of time. I can't think of many front-end names except one guy which I always buy, Mahindra and Mahindra. It is a must for every Indian's portfolio, if you ask me. That's a one-shot share you must have at all times.
Ooh, so I'm sure you're going to the Bahamas now because of the way Mahindra and Mahindra has moved. That one's been hitting fresh lifetime highs every day.
But anyway, I think Ajay will definitely hold you to your word on this breakup of L&T. That was a very prophetic statement. Let's wait and see. Thank you very much, Ajay Srivastava, for joining us with a very entertaining analysis of a bunch of stocks that you are bullish on.